In this video, we're going to show you how to do task 1 from AAT's first sample assessment for business tax. So task 1 is about adjusting accounting profits and losses for tax purposes. So we'd expect your real assessment to look pretty much like this one. So let's see what information they've given us. So they've given us a profit or loss account for company A as follows. So we can see there's a variety of lines in the profit loss account, and what we need to do is identify whether any of these transactions are disallowable, in which case we'll need to make an adjustment when we're working out their taxable profit. And notice that some of the items have notes where we get a little bit more information about them. So let's go and have a look at those notes now. So we can see we have a number of notes, 4 notes, giving us more information about each of these. So we'll have a look at these in more detail in a moment. So let's have a look at the requirements, because we need to make sure that we're actually going to be doing the right thing. There's no point reading all of that information if we don't know why we are reading it. So let's have a look at the requirements to clarify what we're trying to achieve. So we need to calculate the taxable trading profit by entering adjustments to the accounting profit below. So notice it says trading profit because there could be other types of income included in the P&L that are not part of trading, and therefore we'll need to remove them. So the instructions also tell us if no adjustment is required, you should enter a 0. So remember that this assessment is going to be marked by a computer, and you need to follow the instructions or the computer simply won't recognize your answer. So if you just leave it blank, for example, you would get no credit for that. It further tells us if any adjustments are deducted from accounting profits, these should be shown as negative figures using minus signs. So you see that a deduction of 5,000 should be shown as minus 5,000 with or without a 1,000 separator. So in work, you may be using brackets to show negative numbers, but that wouldn't be recognised by the exam software. So you can see the table has already been pre-populated on the left-hand side for us to prompt us, which that's a really good help for us. So let's go and have a look at the various adjustments. Now we've got the list of things here that we could be including, but what we don't want to do is waste time trying to find all this information. So it can be useful then just to go through the information they've been giving us, and we can sort of work out what we need to do with each of these. So we can see that we've got our starting position. There's our net profit, the 217,742. And that is the same number that we're starting off with. So they've done that for us in this sample assessment, so it's reasonable to assume that they'll do that for you in the real assessment as well, but possibly not. So again, we just revised there what that number should be. And then as we go and look at the various other adjustments, so we can see we've got the first number there for depreciation. So hopefully you remember from your studies that for tax purposes, we use something called capital allowances instead of depreciation for companies. And therefore what we need to do is remove that expense from their accounting profit, and we'll need to replace that with capital allowances instead. So this depreciation of 2156 is deducted from our profits. So what we need to do in our answer is reverse that deduction and add it back. So we can include 2156 as a positive number in our table. So we've dealt with the 2156, and so we can move on to the next one now. And notice the technique we're using here. We're going through the profit loss account line by line to make sure we don't forget anything. And that could be the potential problem if you go through the answer table line by line. It could be that you miss some information included in the question. So we need to be quite methodical about our approach. Let's go through the question line by line to make sure that none of the numbers has been ignored. So next then we have our repairs of maintenance of 87,200, but there's a note here with some additional information. So let's go and have a look at that note. So repairs and maintenance include repairs made to a new non-current asset. These were necessary to bring it into working conditions. There's 3,000. And the replacement of the windows in the office. The old windows were wooden single glazed, and the new windows were aluminium double glazed, which cost 18,000. So these are all called repairs, and if they are genuine repairs, then it would be okay to include that as a tax allowable expense. But if they're not really repairs, if they are of a capital nature, then they shouldn't be included in trading profits. That'll be something that we'd consider in terms of our capital gains tax. So the first one then, we've got the repairs to the new non-current asset. And the word new is the issue here, because if this is a new asset, then it really needs to be considered in terms of capital gains rather than trading. And it tells us that we're trying to bring this to working condition. There's a cost of 3,000. So of that 3,000, none of it should be included in our trading profits. Okay, so that's a cost, that's a negative number in our profit and loss account. But what we need to do is add it back to our table here so that we don't include that in our trading. Now, what about the replacement windows? So again, if we're changing windows here, and we're doing an improvement, aren't we? We're changing from wooden to aluminium and from single glazed to double glazed. So that is an improvement, which again would suggest that's of a capital nature. But HMRC has given us some guidance here. HMRC says that double glazed windows is the current standard for windows, and single glaze was the previous standard. So while technically this is an improvement, because there has been an update in the minimum standard really for windows in the country, then HMRC considers this not to be an improvement. So they consider this to be a like-for-like replacement. So that cost of 18,000 is considered to be a repair and therefore an allowable expense. And because it's allowable, we don't need to make any adjustment in our table, so we can enter a 0 here. Remember, we need to enter a 0, not leave it blank, so that the computer can recognize our answer in the exam. Okay, so we've dealt with the repairs and maintenance. So let's move on to the second number now. Below that, so we've got our sales and marketing. So there's the total expense, but again, we've got a note here. So let's have a look at note 2. So sales and marketing include 1,800 on a staff party. And there's also 2,000 on client gifts. So these are bottles of wine, each costing £40 each. The reference materials provided to you in the assessment helps us here. So we're looking at section 6 about disallowed expenditure, and let's have a look to see if there's any information here about staff parties. So we can see there's a section about entertaining and gifts, and we're told that staff gifts and staff entertaining is an allowable expense. So if it's an allowable expense, we can put 0 in our table here because we don't need to make any adjustments. And then what about customer gifts and customer entertaining? So this is going to be disallowable. Yeah, that's what this column is. Yeah, this is the disallowable expense. So this would be disallowable unless it's less than £50, which in this case it is. But it cannot be food, drink, tobacco, or cash vouchers. And it must contain some business advertising. So for example, if you were going to give gifts of calendars with the company logo on it, that would be an allowable expense. If you're going to give pens with the company logo on it, that would be an allowable expense. But in this case, we're giving bottles of wine. So while it costs £40, which is below the 50 that it needs to be, because it's drink, then this is a disallowable expense. So we need to add that back in our answer. So the expense would be deducted in the P&L, so we reverse that and add that back. So notice what's going on here with the total at the bottom of the answer. As we add back all of these figures, our taxable trading profit becomes bigger and bigger compared with the original accounting profit. So it means that we're going to have to pay more tax as we add back all of these disallowed expenses. Okay, let's move on then. So the next number we have our administration. So administration expenses are perfectly fine. We don't need to make any adjustments for that. And we've got legal and professional as the next line. Let's remember that there are some disallowable legal and professional expenses, but we don't have any information for this question, so we can't really use that now. And then we have our motor expenses. Again, there's a note here, so let's go and have a look at that note. So motor expenses include £2,000 lease costs for a car with CO2 emissions of 45 grams per kilometre. The car is used for 50% personal use by the sales director. In the reference materials, there's a section on cars, and in the column, which remember we've got the disallowable column. So what's disallowable? So any cars where there is private use by the owners. Also, 15% of a lease cost is disallowable if there's more than 50 grams per kilometre carbon dioxide emissions. But that's not relevant in this case because we only have 45 grams. So in this case, the car is personally used by the sales director rather than the owner. So that means it's still allowable. And also the carbon dioxide emissions are less than 50 grams per kilometre. So again, all of that 2,000 lease cost is allowable. We don't need to make any adjustment for the 15%. So if it's completely allowable, that means we can enter a 0 into our answer. Okay, and then what about the next one? It tells us we've got speeding and parking fines of 2,400 incurred by the sales director while on business journeys. And in the reference materials, it tells us that if there are any fines on the business or the directors or owners, then they are disallowable. So in this case, we've got a speeding fine for the director, so that's disallowed. So we've got the fine of 2,400, and as that's a disallowable expense, we need to add that back. So you see our profits getting bigger and bigger here for tax purposes. Okay, let's go back to our table. So we've dealt with the motor expenses, and there's our cost and our net profit. Okay, so those numbers are already included in our answer. Is there anything else? We've dealt with note 1, note 2, note 3. Oh, we've not dealt with note 4. Capital allowances have been calculated at 5,300. So remember, capital allowances are the tax equivalent of depreciation, which we use to deduct from our profits before we calculate the tax due. So there we are. That's our taxable trading profits, the 221,998.